On board Mihir Shah, Vice President and Research Analyst for India Consumer at Nomura, joining us this morning. Mihir, currently the biggest concern from a consumption standpoint seems to be the monsoon. How much of it is likely priced in, and what could the adverse impact of that on demand be? Rural, urban, your take.
Thank you for having me. Yes, you're absolutely right. I mean, after seeing 2 consecutive years of above normal monsoon, we are likely to see below normal monsoon this year. Secondly, it is going to be an El Nino year, so you will see some impact of that as well. But how concerned are we? Not while there will be some issues, but we are not very concerned, largely because El Nino, which is kind of indicating that you will have weaker than expected monsoons, is going to be in a weak to moderate range over June, July, and August, and will only strengthen in September at the fag end of the monsoon. Plus, when you look at the Indian Ocean dipole, while right now it is in neutral zone, if Indian Ocean dipole turns to positive over the coming month or so, then it negate the impact of El Nino. So there is a possibility that while there will be an El Nino, there are certain negating factors which we will watch out for, which can support the below normal monsoon that is expected. So that's one. Second is that, like I said, this is going to be a below normal monsoon after 2 consecutive years of above normal monsoon. If you look at the reservoir levels, they are at 15% above the 10-year averages. And if you look at the government's buffer stocks, they are also, 2x of what their normal stock levels should be. Plus, there are district level mitigating factors that the government is putting in place, which should be supportive for rural. So while we will have a weaker than expected Kharif output, there are certain mitigating factors, and we are not as perturbed as it should be.
Interesting you say that, and you are citing in your note as well, Mihir, the fact that there are strong buffers, both when it comes to reservoirs as well as rice stocks when it comes to rural. Having said that, Mihir, what is it that you're noticing in terms of where rural demand stands while it still continues to outpace urban? Is it at the same pace as it used to be earlier?
No, thank you. You're right. I mean, rural demand since the fourth quarter has seen some moderation, while urban demand, on the other hand, has seen some initial pickup. The gap has been narrowing. While rural continues to outpace urban, we are seeing a narrowing of gap. We believe that can likely continue. At the same time, if you look at many of the staple categories, many companies have put in low to mid single digit pricing. So along with a likely weaker Kharif output, little bit of inching inflation, there is going to be some pressure on rural demand. But like I said, there will be, so the improving trajectory will stop, but it can be around a range bound level is what we are thinking.
Mihir, hi. While monsoon play a very important role, over the last 4 to 5 years, there has been a lot of concerted effort to improve water availability and storage for agri purposes. And the new schemes of the government which have been introduced, whether it's on the state level or central level, have led to more, less dependence on monsoon. How much of that has been factored in by you?
No, you're absolutely right. If you see in our monsoon monitor report that we come out every fortnight over these monsoon period of 4 months, we have indicated that the irrigations have over the period of years improved, and the dependency of Kharif has continuously been going down over the years. And there is a increasing saliency of Rabi crop output. So now, we are not largely dependent on monsoon as we were a decade ago. And Rabi crop also has an important point that we are playing out. Again, like I said, reservoir levels are healthy at this point of time, and you can expect some support on Rabi output, even if there is some impact on Kharif output.
So let's talk about some of the, company-specific moves that we've seen. And I have to start off with the ITC, considering it really has been the outlier when it comes to pricing. How do you see that story unfold?
No, ITC, at the beginning of the new year, we did see a very sharp increase of 40+% increase in tax. And that was coming after many years of no increase in tax. So while it was a very sharp move, it was also a surprising move, was not expected. 40+% increase in tax, company has passed on anywhere between 25 to 30% pricing. So you will see this not only impacting volumes. So we have penciled in a high single-digit volume decline for the quarter. But more importantly, even your margins, because your tax increase is higher than the price increases that they've been able to take. So you will see closer to 20% EBIT decline on cigarettes. Now that is a very sharp decline, and you can already see that in the stock price. Post 1Q, we believe the worst can largely be over. So the volume and the EBIT decline of high single digits and 20% on EBIT will start reducing from 1Q. However, on a 2-year CAGR basis, we still have a flat earnings growth for ITC, and hence we have a reduced rating on the stock.
Understood. So while this has been quite a sharp re-rating, you're still waiting for more signs as to how the pickup will be. What about consumer durables? Do you track that, Mihir? And is that a space which you're looking out for, just given the fact or the way in which the weather is shaping up?
So I have discretionary and staples under coverage. Durables is covered by a colleague of mine.
Okay, I'll switch focus to paints, Mihir, because that's the other space which you're constructive on. In terms of the Q4 numbers, the Asian Paints numbers were extremely strong. The question is whether that's one-off or whether that can sustain through FY27. It's one of your top picks. What's keeping you positive?
Yes, no, we had an anti-consensus buy and we had upgraded 2 quarters back. It did well in between. Then there was a little bit of a headwind that we got, and then again in the last quarter we did see a very sharp 30+% move. So it is playing out well, and our call is going decently well. As far as our thesis is concerned, we don't think it was a one-off of volume growth that we have seen. We believe that the high single, early double-digit volume growth will likely continue this quarter and for the coming quarters as well. More importantly, we believe that there is a favorable base that Asian Paints has, because last year, while you had above normal monsoons, which was impacting some amount of painting days, this year you have El Nino, so there will be more number of painting days that the companies can have. Also, last year there was some disruption because of elections, workers going. There is no likely disruption this time around. Secondly, there is a very sharp return of pricing growth, closer to 13-14% that they have taken. This quarter, we believe that effective price increases will be closer to 7% because of the timing of the price increases. But you will see 13-14% pricing growth coming in the next quarter. So also, if you see on the margins, Jan and Feb were pretty soft on the commodity cost, and usually companies will have 2 to 3 months of inventory. So in 1Q, we are not expecting a lot of pressure on margins. In fact, only a little bit of pressure. While most of the cost inflation will be seen in 2Q, companies have already taken sharp price increases to mitigate that cost inflation. So margin impact in 2Q also can be, much soft basically. So strong growth continuing with less margin impact, with in competitive intensity going down, chance for some re-rating lined up, and hence we believe that Asian Paints can do well and remains one of our top picks.
How have you penciled in Q1 from a point of view of demand coming in from rural markets? Second, there has been a reverse migration of labor back there in Q1 because of many issues from the cities to the rural area because of gas and other issues, and the wage increase which we are seeing in rural market, which is much higher than the urban market.
This is for paint specifically or overall sector? You're
overall
asking?
sector from a point of view, from a consumption point of view.
Right. No, like I said, I mean, we were expecting a bit of a weakness in rural this time around because of these issues that you highlighted. While there, there is a supporting factor on better wage growth, etc. We believe that will be played out in the coming quarters, and hence the impact of El Nino can get some cushion. So weakness in rural will continue a little bit, but it will not. It will be still growing higher than urban growth.
What about beverage stocks, Mir? And of course, one of those being Varun Beverages. The kind of commentary that came out through the Q4 earnings call was extremely strong. And what about some of the consumption plays linked to a harsh summer, ice creams and the like, where milk prices have gone up, and therefore that could be margin dilutive, but volumes could be extremely strong, right? Are those areas at all something that you're liking? And if so, is there a preference tilt in terms of names?
As far as categories are concerned, each companies have very many categories. So there are pluses and minuses within the company. So while one may want to choose higher summer-centric, categories can do better than the other ones. We believe it's better to look bottom up instead of looking category. You're right. I mean, soft drinks. Carbonated beverages, ice creams, cooling hair oils, all these ideally should do better. At the same time, you will also see certain headwinds in tea, certain QSRs, those will be certain headwinds also. So you will have plus and minus mitigating factors that will play out actually.
Quite interesting. Mihir, thank you so much for taking the time out and speaking with us today. Good to get in your insights.
Thank you, pleasure.